It's June 12th, JLD here, and welcome to MSTR today for two reasons. Number one, because I'm actually traveling. I'm going back to Maine for 6 weeks. So you'll be seeing a new backdrop for me for the next 6 weeks as I produce MSTR today. And the second reason is just, frankly, a slow news day after the big, awesome, amazing Bitcoin pump yesterday and the day before yesterday as well. So I'm just going to play some epic Michael Saylor clips. I have 5 here lined up for you. They're all awesome. I hope you enjoy, and we'll be back with the regularly programmed station tomorrow. So please sit back. Remember, this is not financial advice, and please enjoy.
And God says, okay, I've decided to solve your problem. I'm going to run a bank in heaven. I'm going to issue 21 million God coins, and they're infinitely dividable. And I'm just going to go ahead and do this for you for just about nothing. And you can telepathically move the coins between each other to pay off your debts. And I'm going to make sure that no bank, no government, no counterparty, no country, no criminal takes your money away from you. And I promise never to inflate it. I'm just going to, so there's your money. There's your bank. It's a bank in heaven, right? And a person can hold a gun to your head, but you've got the money in your head, and the angels will, protect you. They might murder you, but they're not getting your money. So if I thought about that, I'm thinking, okay, God is going to run an honest bank for me. Okay, good. That's probably good. But in the absence of God offering to run the bank, and protect your property rights forever from everybody, the next best idea is we create a piece of software using cryptography, and then the software instantiates in the protocol 21 million coins subdividable by 100 million, so 2.1 quadrillion satoshis, which is effectively enough. You could subdivide it more if you needed to. We create that system, and now you can send 1,000, 100, a million, a billion, 10 billion, $100 billion worth of that from anybody to anybody without asking anybody's permission using a computer. You can hold $1 million in your head, $1 billion in your head. You can hold it in your hand. If you know you're going to get arrested, you can just zap it to your sister in Singapore. If you don't trust the bank in New York, you can put it with the bank in London, right? And if you don't trust any bank, you self-custody. It's a good point, and here's the way I would say it. The difference between money and speculation is, if it's money, then the largest holders are buying more. And if it's speculation, the largest holders are selling. So the real issue is, are the hodlers buying or are they selling? I'll give you an example of great asset classes that are money. Apple stock is money. Apple is buying more, and a lot of people that own Apple stock will buy more. New York City real estate, or London real estate, or Palm Beach real estate, luxury real estate is money. Because if you look at wealthy people, they're not selling. There's no one bragging about how they sold all their nice places in Palm Beach, New York, and London. They're buying more, right? If you've ever met a rich family that has real estate holdings, they don't sit around saying, yeah, we're going to diversify and we're going to sell next year. We're going to get rid of the entire portfolio at a huge profit over 10 years. What they say is, I'm looking forward to the next deal where we're going to acquire this building, or we're going to buy this other thing, right? They buy and they hold. And they typically buy and hold to give to their children's children, right? The same is true with art. If it's good art, collectors, Frick, Andrew Mellon, they didn't buy art to flip the art, right? They're not speculators. I bought a Picasso so I could sell the Picasso, right? They wanted to buy them all. That's why they call them collectors. So if something is deemed to be really valuable, you bought $1 billion of it, and your goal is to buy another $1 billion of it. And so if you think about all these things, which thing in the crypto ecosystem is that, right? Bitcoin is that. right? I bought a bunch of Bitcoin. My goal is to buy more Bitcoin, right? It's just a very simple acid test. Do you have an exit strategy, or is that the exit strategy? And of course, that makes Bitcoin the best asset class. It's an entire ecosystem of products, services, companies, securities, derivatives, and professions. It's the global digital asset network. It's the internet of money. It's the securities, or Bitcoin-backed securities, are being issued worldwide, everywhere, at an accelerating rate. This year, right, you saw an explosion of spot ETFs in the US, but look at all the ETFs in Hong Kong. Look at all the ETFs in Europe. This is the beginning, right? You're going to see more and more and more. Every one of these companies is joining the ecosystem. They're securitizing. And it's not just this MicroStrategy security. Options are security. There are options and derivatives on the securities. There are bonds on the securities. This is exploding. It'll continue. Every Bitcoin miner is a security. One day there'll be 1,000 securities or 10,000 securities, all backed by Bitcoin. Same with corporate treasuries. Bitcoin treasuries are growing rapidly, right? They keep this chart up every month. It's never declining. The chart's not ever decreasing. It only goes one way. Bitcoin is a capital ratchet. It's a one-way ratchet, right? Archimedes said, give me a lever long enough and a place to stand, and I can move the world. Bitcoin is the place to stand. The leverage is coming via all these securities, all these corporate treasuries, right? And the leverage is getting to be extreme. MicroStrategy showed you how you can actually generate performance with leverage, but we're just the first. We're not the only. You could do it 10,000 more times. The more leverage that gets put on this network, the bigger the network's going to get. Our business strategy is to be 100% Bitcoin. And so we will always buy Bitcoin. Bitcoin is our hurdle rate, and there are a couple of reasons for that, really almost three. One, we want to be neutral because I want to help hundreds of companies, and I can't afford to play favorites, and I don't have enough time to be invested in just three of them. The second is all of our credit instruments we sell, those are all based upon a homogeneous credit risk. You're holding Bitcoin. Are there any complications? No. If I were to invest in 22 things, then there would be 25 pages of disclosures for each thing, and there'd be 250 pages of consideration. And I don't want to complicate the decision my investors make. I want to be hyper transparent. You know, if one of them were to work differently than Bitcoin, if it was better or worse, the company becomes opaque, and it becomes opaque. It's hard for people to understand and to trust us. See, part of our value proposition is because you know exactly what we're going to do. If you disagree with it, you can short us with 20x leverage. And if you agree with it, you can go long with 20x leverage. And you could put on $1 billion bet that's good for 4 weeks. The last thing you want is for me to say, oh, we're investing in a new business and we're very excited. And it might, and it just screws up that guy's $1 billion bet and that guy's $1 billion bet. And now they're like, I can't trust the company. I don't know what they're going to do. I'm just going to sell. I don't want to play the game. So our job is to be neutral, Switzerland, with regard to the ecosystem, and make everybody successful, but also to be laser-like in our business model, which is we're going to create equity, which is going to be levered Bitcoin. We're going to attempt to outperform Bitcoin with leverage, and we're going to create credit instruments that strip volatility and risk and performance off of Bitcoin. And we're going to keep doing it the same way. And I think all these other businesses are great opportunities for private equity investors, venture capital investors. They have other pools of capital that is not invested in Bitcoin. The way you could think of it is my $65 billion of Bitcoin is pledged to support the equity and to support the bonds and support the preferred stocks. and I need to make sure that pledge remains inviolable. And I need people to say that's what they're going to do for the next decade. And if I believe that, then I will buy something and I will hold it for a decade or 20 years or 30 years. We want people to know what we stand for, and this is what we stand for: Bitcoin forever.
When it comes to my assets, diversification is key. I don't want to be over leveraged in any one thing. I mean, yes, I own MSTR and it makes up a large part of my portfolio, but I also own Bitcoin and always will. And now, thanks to my new sponsor, BitIRA, you can own Bitcoin in a tax sheltered retirement account. BitIRA has been around for almost 10 years as one of the trailblazers in alternative IRAs for crypto. They have built the world's most secure digital IRA. Here's why you'll love them: end to end insurance, highly secure storage, multi encryption, and registered with the US government. And it's fully IRS compliant. If you have a 401k from an old employer or an IRA gathering dust and you'd rather have that retirement account converted to an IRA in Bitcoin, BitIRA will help you convert it free of taxes or penalties. Best of all, you can trade crypto within your retirement account without taxes incurred on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Again, that's bitira.com/JLD to open a tax sheltered IRA in Bitcoin.
It's going to be fought with money, right? Right. The buyers, the spread of Bitcoin. I said, I said in Vegas, a corporation is the most effective wealth creation machine that we have yet devised. And if we think about the spread of Bitcoin as a monetary virus and as an idea, um, the super spreaders, the amplifiers of the virus are corporations. When Bitcoin hits an individual, if Bitcoin arrives, at my proverbial dentist, and the dentist clocks a couple $100,000 a year or whatever, they're buying a few $100,000 of Bitcoin. And as I said, in the war to determine the future of money, right? It's going to be fought with money, right? Right. The future of money is going to be fought with and won with money. So the dentist is he's generating a few $100,000, or she's generating a few $100,000 a year, and so over 20 years, you're going to buy $4 million of Bitcoin. When the dentist incorporates and becomes a company, the dentist is going to sell $1 million of stock, and they're going to buy $1 million of Bitcoin in a month. And when the company recapitalizes on Bitcoin, then your real opportunity is to any operating company can sell equity or sell credit, issue credit, and public companies are the best. So, say you're a public company, the superpower you have as a public company is you can sell equity, you can issue warrants, you can issue bonds, convertible bonds, junk bonds, or preferred stock. And the preferred stock can have any rights. It can look like equity, it can look like convertible equity, it can look like a bond, it can have dividends or not. So when a company adopts the Bitcoin standard, that dentist that becomes a company doesn't buy $1 million of Bitcoin in 5 years, doesn't buy $1 million of Bitcoin in 1 year. The company issues $1 million of equity and buys $1 million of Bitcoin in 1 month. But it's immediately profitable, which means in the next month, the company can issue another million. And so a company may very well start to issue $1 million a month of security, of equity, and then all of a sudden it's bought $10 million of Bitcoin. So now the interesting thing is, where is all the money in the world? There's $100 trillion of money in the equity capital markets. There's 300 trillion dollars of money in the credit markets. All of the equity capital in the world is valued based upon future expectations of fiat cash flows. Every company in Nigeria is valued based upon the expectation of Nigerian cash flows. Every company in Brazil is based on Brazilian cash flows. Every company in the US, US cash flows. Okay, and we know that the value of that cash is falling, but we also know it's very competitive. So you have a long, heterogeneous, uncertain, like credit risk there, or a equity risk, we'll call it. And then with credit, all of the creditors, they're valued based upon the future expectations of cash flows. I borrow money, I don't have the money. I promise you I'll pay it back. I'm going to get the money over 10 years, right? So the existing markets are based upon these future expectations of business operation. We're valuing real world assets, we're valuing future cash flows, we're valuing equity, or opportunities. And the Bitcoin treasury company idea, and the most elegant business model is, I have a stack of Bitcoin, $10 million of Bitcoin. I start issuing equity based upon my ability to acquire more Bitcoin. Then I issue credit, fixed credit, convertible credit, some other credit, and then I use it to buy Bitcoin. And of course, the point is, when Metaplanet was a hotel, they might be able to buy $1 million of Bitcoin a year. But when Metaplanet started issuing equity, it's able to issue $1 billion of equity in a year. And so now they're buying not a million, but $1 billion a year. But the rate at which a company can issue equity or credit is exponential, but it's not like annual. You might be doubling every month, right? You might go into something like on October 30th, we announced a $21 billion ATM. We thought, well, if we do that in 3 years, that'll be the most successful equity program in the history of the capital markets. If we did it in 3 years, and we did it in like 3 months, because all you're doing is you're swapping equity for Bitcoin, and you're swapping credit for Bitcoin. Companies can do that. Individuals can't do that, but when you put three individuals together and they cooperate, they become a company. So really, I wouldn't be afraid of a company. I would just say a company is when, one dude that knows finance got together with one lawyer and got together with one leader, a CEO, a CFO, a general counsel. Now you have a Bitcoin treasury company. If you put Bitcoin digital capital behind it, and now you can grow literally as fast as you can issue the security and buy the Bitcoin. And that is an investment cycle which is 1,000 times faster than, a physical real estate cycle. What's the second best? There is no second best.